We are live online. Texas REIAs is the largest network of real estate investor associations in the great state of Texas, with over 150,000 members, participants, and attendees going back to 2003. And by the way, there's a beautiful spread over there of some food for you guys, so go ahead and grab yourself a snack. They've got coconut shrimp, they've got some sushi, and some, I don't even know what else is over there, but it's really tasty. I had some earlier, and again, this is all paid for by our vendors. We have a couple of hundred vendors that pay for all of this, so thank you, vendors. You can also become a member of the REIA. Please do that. It's a really smart thing to do as well. So we're going to do another presentation for you guys, and we're going to do a market update, and we're going to tell you what's going on in the marketplace. And what is the biggest news in real estate over the last couple of years? And I'm going to keep talking, guys, while you're getting your food, so don't worry about that. What is the biggest news in real estate? What's changed? Interest rates. Interest rates changed. So what happened? Interest rates went up, and they're different than they were before. So let's see if I can get a poll of the audience. Interest rates, do you think they're high? Do you think they're low? Who thinks interest rates are kind of high right now? Who thinks interest rates are high right now? Who thinks interest rates are low right now? Okay, we got a lot of highs and a couple lows. I think interest rates are normal right now. I've been buying rental properties for 21 years in Texas, and most of my rental properties have interest rates between 6.5% and 7.5%, which by all historical standards is normal. That's normal. Now, I'll tell you, if you go back in history, this is a chart of interest rates going back to 1975. From 1975 to 1981, interest rates on mortgages got all the way up to, look at that, 18%. So for anybody that's complaining about 6.5%, how about 18%? You know, relative to that, interest rates are super, super cheap. Now, when interest rates go up, what happens to home prices? Do you think it makes home prices go up, or do you think it makes home prices go down? Okay, who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Most of you are getting food. All right. It does both, interestingly enough. You see, real estate doesn't really care about interest rates. Real estate cares about supply and demand. All it cares about is supply and demand. So only in as much as interest rates affect supply and demand does it affect home prices. Now, for sure, when interest rates go up, mortgages are more expensive, i.e. less affordable, which means there's less demand. So that forces prices down. But there's some offsets. What are the offsets? Why did interest rates go up? They raised interest rates to fight what? Inflation. Inflation. Now, most people, when they talk about inflation, they always talk about it like it's this bad thing. Inflation is bad. We have to whip inflation, get it under control. I disagree. Personally, I'll tell you something. I love inflation. I just have another word for it. I call it appreciation. Yeah. When all of your money is in real estate, you like inflation. Because when there's inflation, where do you want your wealth? Assets, in stuff, gold, real estate, right? Everything goes up other than the money that goes down, right? So inflation is really good. When you own $30 million worth of houses, you go to bed hoping for more inflation, i.e. appreciation. How many of you have owned a house for the last 3 years? Who's owned a house for the last 3 years? Nice, you're a lot richer than you were 3 years ago. Congratulations. What if you had 20? What if you had 200? Can't go back, can you? Do anything you want going forward. Yeah, so there's offsets. Here's another offset. Typically, historically, 2/3 of the houses that are for sale are resale, and 1/3 are new construction. That's the mix. Right now, it's inverted. Right now, 2/3 of the houses selling are new construction, only 1/3 resale. People are not selling their house. The economy's okay, the stock market's okay, but people are not selling their house. Why not? because they got one of those 3% mortgages and they don't want to give it up, right? So all of that inventory supply is being held off the market, and that's pushing prices up. So yeah, we got things pushing down, we got other things pushing up. Interestingly enough, this red line here is median home prices going all the way back to 1975. When interest rates went all the way up to 18%, guess what? Home prices went up. And when interest rates came down, guess what? Interest rates went up again. I'm sorry, home prices went up again. And when interest rates went up and down, home prices still went up. Now there are some bubbles. That's a 2008, 9, 10 bubble, and there's other little bubbles, but it's not simple as to just say interest rates go up, home prices go down. There are offsets. Historically, there's not much of a direct correlation like you might think. So I'll take you through a little history and give you a little market forecast. This is the state of Texas. The average price house in Texas is $422,000, up 3%. The median price of a house in Texas, $335,000, up 1.5%. Now, if you're only going to look at one number on the chart, this is the number to look at right here. Months of inventory. What is months of inventory? If you want to know one number about where's the market, this is the number to look at, months of inventory. The way to understand months of inventory is if you took all the houses for sale on the MLS and you stopped adding any more houses for sale. So we're just going to sell the houses for sale. We're not going to add any more. How long would that last? And the answer is 4.8 months. So the shelves would be empty in 4.8 months. Now, to put that into perspective, they say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If there's right around 6 months of inventory, you're in a neutral market. Well, we're still in a seller's market. Now, a year ago, there was 3.8 months of inventory. So a year ago, you could say we were in a hot seller's market, and now we're in a lukewarm seller's market. But it's still a seller's market. And that also is the average amount of time it takes to sell a house. So let's take a look at some history. 2021, prices in Texas went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. And 2023, they flattened out. So prices went up, they went up some more, and then they just flattened out. The volume went down, less sellers, volume went down, less buyers. When you have less sellers and you have less buyers, prices, they didn't go up, they didn't go down, they just flattened out. And they bounced along flat for about a year. And just over the last few months, they've started to come back a little bit. So if you're waiting for some big correction, that was probably it. Hope you enjoyed it. Houston, the average price house, $423, up 5%, strongest market in Texas. Median price, $335, up 2%, 2.7%, 4.4 months of inventory. Lease prices are up a little bit. What does that tell you? Commercial. When lease prices are up, what does that mean? Are apartments empty or apartments full? What do you think? Yeah, they're full. Yeah. People need a place to live, and houses are flat, and apartment prices are going up a little. History, 2021, Houston went up 16%, 2022 up another 10%, 2023 flat, just like Texas. Dallas, big Dallas, the average price house in Dallas, $509,000, average. Second most expensive city in Texas. Up 3%. Median price $400,000, up 1%. Months of inventory, 4 months of inventory, strongest market in Texas. Last year it was also the strongest market with 3 months of inventory. 2021 prices went up 20% in 1 year. 2022 they went up 15% in 1 year. 2023 flat, up 1%, which is flat. And then we get to Austin. Now, Austin is a special case and is an outlier. And I'll tell you why it's an outlier. But the average price house in Austin, Texas is $560,000. That is not a typo. The most expensive city in Texas is Austin, $560 average price, up 1%. Median price, $429,500, down 1.4%. So basically it's flat and flat. 4.4 months of inventory, similar to the state. But what's the outlier? Here's the outlier. In 2021, prices in Austin went up 29.3% in 1 year. And I was there. 29% in 1 year. In 2021 in Austin, Texas, when you put a house on the market, you'd get 11 offers in a weekend. 1 would win, 10 would lose. The 10 people that lost, they'd put an offer on a second house. They got 11 offers in a weekend. 1 would win, and 10 would lose. And this would happen over and over again. And then people started to scream at their realtors. You're giving me bad advice. I keep getting outbid. What do you have to do to buy a house around here? And it turns out in 2021 in Austin, Texas, in that unusual abnormal year, it became normal. In that abnormal year, it became normal for people to buy houses at 5 to 10% above appraised value. Do you know that the lender will not allow you to buy a house above appraised value? Did you know that? The total down payment and the total loan cannot exceed by $1 the appraised value. If you want to buy a house above appraised value, you got to put your down payment, you got to get your loan, and then after all that, you got to pile a sack of cash on top. And in 2021 in Austin, Texas, it became normal in that abnormal market to buy houses 5 to 10% above appraised value. 2022 didn't get much better, went up another 10%, and then in 2023 it went down 8%, and then it flattened out. So most of Texas went up 30 and flattened out. Austin went up 40, came down 10, and flattened out. If you bought a house 3 years ago, you made 30% no matter where you went. If you bought a house 1 year ago in Austin, you lost 10%. And that's just perspective. And that was the correction from 2021. And then finally, we get to San Antonio, the most affordable major city in Texas. Average price $372, flat. Median price $309, down 2%, basically flat. Months of inventory, 5 months of inventory. I think it's about the slowest market in Texas. 2021 price up 16%, 2022 up another 12%, 2023 flattened out, down 2%, which I call flat. Where's the market going from here? Well, what pushes the market? The economy affects the market a little bit, not directly. People think there's a direct correlation. Not really. During the Great Depression, real estate prices went down a whopping 6%, not much. During the Great Pandemic, another 1 in a 100-year event, real estate prices went up 30%. So there's not a direct correlation between the economy. However, when the economy is doing okay to good, people feel better and are more likely to buy real estate. Affordability. Now this has some effect. Interest rates went up, affordability went down. So that's pushing prices down. House price trajectory is flat. It's not going up, it's not going down. Housing supply. We have a problem with supply. What is the supply? We're not building enough houses. Who knows this? Do you know that we're in the middle of a housing shortage? Who's heard of this? Okay, I'm telling you, we have 6 million fewer houses than we need for the people that need a place to live. 6 million short. We're not building enough houses, and yet people keep moving here and people keep having babies, and we're not building enough houses. It means we have a shortage of supply, and that's driving prices higher. Demand, closed sales trajectory flat, pending sales trajectory flat. In migration, now this is actually the biggest bullet on the screen. This should be triple size. Not all of these things are the same. This is actually the biggest one on the page. Migration is the ratio of people moving in versus people moving out. Population growth. That's going to affect real estate more than anything. It's the demand. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And then there's another 5 million people, we don't know where they went, but a bunch of them are here too. And they all need a place to live, and we're just not building enough houses for all the people that need a place to live. But we're not building enough apartment buildings, and that's a huge upward push on prices. And then finally, the wild cards. I heard we just had an election, there's a few wars going on, who's going what with inflation, I don't know. So these are ups and downs and sidewayses. What do you think, guys? Let's do a vote in the room, no right or wrong. Who thinks prices are probably going to go up from here? Who thinks prices are probably going to go up? Who thinks prices are probably going to go down? Who thinks houses are probably going to go down? Okay, we got a lot of ups and a couple downs. I'll give you our forecast. Our forecast is that was the bottom of the market, and it wasn't much of a bottom. Interest rates have started to come down. They're down 0.75%. They'll be down another 0.25% by the end of the year. It's really the last thing kind of pushing any downward pressure on the market. That being said, we don't expect the market to do much. Prices will rebound by the end of the year. Sales will be up about 2%. Prices will be up about 2%. So it's going to be a year that is just kind of flat. And I like that, to be honest with you. You know, in some markets, it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It's never easy to buy and easy to sell. But like a few years ago, the market was on fire. It was impossible to buy. People were overpaying, over-improving, making rookie mistakes, and getting hurt. Sometimes it's easy to buy, but it's impossible to sell. Right now, it's right normal. You can find deals right now. You can sell things. It's not that hard right now. So I would say it's a great time to be a real estate investor. So any questions on this? Was this helpful for you guys? Yeah? So hold on just a second. Is Olivia still out there? Yeah. We're going to take some questions from you guys. I could keep going with a commercial presentation. You guys probably look kind of tired. I'm kind of tired, so I don't know if you want to keep going or not. But I will take any questions that you guys have. You guys all learn a lot tonight? Yeah? What questions do you have? Residential, commercial, anything going on? Olivia, I think everybody's kind of tired. I was thinking we probably won't do a commercial presentation tonight. You're saying that's probably good. But I do want to take any questions that you might have, because we really want you all to get started investing in real estate. We want to help you on your own individual journeys. Some of you, phase 1, phase 2, phase 3, commercial, residential, active, passive. What are your questions?
Where do you find investors?
What's that?
Where do you find investors?
Where do you find investors? Well, I'm an investor. I don't understand your question.
Like let's say you find a good deal, like where do you find an investor like partners?
So join the REIA. You have 20,000 investors, including myself and 20,000 other guys that want to talk to you. So just join the REIA. You're connected to them on a private Facebook group that's moderated. So instantly you got, that's what the Texas REIAs is about. This is 150,000 members, participants, and attendees. So this is the biggest, by far, network of investors there is in the state of Texas by an order of magnitude. So you're here. Welcome. Question? So there's many types of commercial real estate. We do multiple asset classes. We do apartment buildings. We do storage. We do RV parks. We do mobile home parks. We do assisted living facilities. We do a residential assisted living facilities where you can rent an ordinary house out for $20,000 or $30,000 a month. You know, we do all of that. Strip malls, land development. Do you have any questions on any particular ones? So we have a big network of people that do all of those things. People tend to focus in the different niches. If you're interested in commercial, I put up a little link earlier. We'll send you some information and even invite you to one of the commercial workshops where you can dive into the different asset classes. We have different experts that are multimillionaire asset managers across all the different assets, and you can kind of learn about them all and figure out which ones you might want to be focusing on. Yeah? It's okay.
Do you guys also have information on asset protection?
So we have a number of vendors that do classes on asset protection, but I'm going to tell you this, go make a pile of money before you go learning about asset protection, because a lot of people make the mistake of setting up asset protection before they invest in real estate. So if you go to a CPA and an attorney and say, I want to set up a real estate business, they're going to say, oh, great, you know, I can help you. And they're going to ask you questions like, how are you going to make money? You're going to be like, I don't know, I guess I'm going to flip houses and do stuff in real estate. Oh, okay, well, you need this, 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 and this. And they're going to build a set of entities and corporate structures to protect you as you grow a business you haven't even started to grow yet. And then when you actually start doing it, you're going to discover that you're growing a business different than you expected. And your asset protection is not optimized to what your real business is. So I'm going to tell you, let's go do deals. Let's make real money. After you flip 8 houses, then you're allowed to ask me the question, how do I do asset protection? And I will set you up with some of the best people in the business, and you'll be ready for them at that time. Yep. More questions?
Kind of looking more into the asset protection for LLCs.
Yeah.
For doing wholesale flip, that I could have in the same LLC. Wouldn't be like muddying the water too much. Whereas
So believe it or not, it is legal to buy houses in your name without an LLC. And about 90% of transactions do not involve people with LLCs, even with real estate investors. But yeah, get an LLC. You can buy an LLC for $325. Make that the buyer on record for your real estate transaction. That'll provide you all the asset protection you need until you've done at least 8 deals, and then we'll get a little more complicated. So it's a very simple thing to do. I don't like people to overcomplicate things when they're getting started. So that's why I push back on asset protection a little bit. So I don't want people to spend a lot of money creating the perfect business that's never done anything yet, right? I want to create the perfect business that's making money and then make it better. So, question?
Do you know any specific title companies that you like to work with in Austin?
Yes.
Wholesale type deals or things like that?
Yeah, here's what you have to understand about title companies. You can either get title companies that come with attorneys, or you can get attorneys that come with title companies. Title insurance is state regulated, exact same price, exact same insurance, no matter who you buy it from, everywhere. There's no difference, it's a total commodity. The attorneys, on the other hand, you have specialists, you have generalists. We work with specialists, real estate attorneys that specialize in creative real estate transactions. Join the REIA, post on the REIA, I want to do XYZ transaction in this location. You will be hooked up with all the attorneys you need depending on the transaction and the location. You know, we have 100 of them. That's a simple problem to solve.
Okay.
Yeah. Yep. Question? What's that? What is an LLC? LLC stands for Limited Liability Corporation. It's one of the simplest companies you can set up. You can set up as a single member or multi-member, but it's basically, instead of you doing real estate in your name, listing yourself as the buyer or seller, you list your company as the buyer and seller. And then if anybody sues you, they're suing the company. Okay, so asset protection means that if somebody sued you, they would sue the company. If they won the lawsuit, they get the assets of the company, but the company doesn't potentially have any assets. So they're suing an entity that has no assets, so they can't get through to you. I'm really simplifying that when I explain it that way, but that's asset protection. The truth is, contrary to what you see on TV, lawsuits are relatively uncommon. It's not that common, unless you're an ex-president or something, that you're going to be in a lawsuit. So most people don't get in lawsuits, right? We have insurance, and it's not as scary as it might sound on TV. So, other questions? Yeah. You get a realtor to give you a password to the MLS. All realtors are allowed to have assistants. Any realtor can have as many assistants as they want. So you just get a realtor to call you their assistant. As their assistant, you get a password to the MLS. The realtors have assistants, so their assistants can do CMAs for them so that they can work on getting more clients. So if you simply become the realtor, you can become the realtor's assistant, then you get access to the MLS, you can run CMAs. Okay? Simple, yeah. And that's how you have your cake and eat it too. You don't have to get a license, you don't have to follow any of the licensing requirements, you're not going to be restricted by all the restrictions you have if you were a realtor.